Two guys walk into the same bank on the same Tuesday morning. One of them waits in line, fills out a form, and gets told there's a fee for that. The other one skips the line entirely, gets a dedicated phone number, a private advisor, and a suite of financial products most people have never even heard of. Same bank, same building, two completely different experiences, and the only thing separating them is a number in an account. Banks do not treat all customers the same. And today, I'm going to show you exactly how that system works, because once you see it, you can't unsee it. And more importantly, you can start using it to your advantage. Most of us grew up thinking a bank was just a place you put your money so it didn't get lost under a mattress. You open an account, you get a debit card, you check your balance every now and then. Maybe you wince a little. You move on, and that's it. That's the relationship. But here's what nobody tells you in school, and what your bank certainly isn't going to volunteer on its own. There is a tiered system inside every major financial institution in this country. A quiet hierarchy. And the way your bank treats you, the products they offer you, the fees they charge you, the advice they give you, all of it depends on where you fall inside that hierarchy. Most people are at the bottom of it and don't even know there's a top. So let's talk about what that ladder actually looks like and what changes as you climb it. Tier 1, standard banking. This is where most people start. Checking account, savings account, a debit card with your name on it. At this level, the bank sees you as a basic account holder. You're valuable in the sense that your money is in their system, but you're not a priority, and you'll feel that. At this tier, you're likely paying monthly maintenance fees unless you meet certain conditions, like keeping a minimum balance or setting up direct deposit. You're getting the standard interest rate on your savings, which, let's be honest, is almost nothing. You're calling the general customer service line when something goes wrong, waiting on hold, and hoping whoever picks up actually has the authority to help you. There's nothing wrong with being here. Every man starts here. But the key thing to understand is that at this tier, the bank is making money off you in ways you might not fully see yet. Here's something a lot of people don't realize. When you deposit money into a checking or savings account, the bank doesn't just hold it for you. They lend it out to other people, mortgages, business loans, car loans, at a much higher interest rate than what they're paying you. That's how banking works. Your idle money is their working capital. At Tier 1, you're giving them a lot and getting back very little in return. Tier 2, preferred or relationship banking. This is the middle of the ladder. And this is where things start to shift. Banks give this tier different names. Some call it preferred banking. Some call it a relationship account. Some call it a select or signature tier. The terminology varies. The concept is the same. To access this level, you typically need to maintain a higher balance, somewhere in the range of $10,000 to $50,000 across your accounts, depending on the institution. Or you're bringing multiple products to the bank, a checking account plus a savings account plus a loan or mortgage. The bank now sees you as someone worth retaining, and the treatment reflects that. Fees start disappearing or getting waived. You get access to higher interest rates on certain savings products. You might get a dedicated relationship manager, an actual person at the bank who knows your name and your financial picture. Customer service becomes faster, more responsive, more personal. You're no longer a transaction. You're a relationship. This is also where banks start making recommendations that go beyond basic products. You might be introduced to certificates of deposit, money market accounts, or investment options. Not because they suddenly care about your future, but because you've shown you have money to move, and they want it to stay inside their ecosystem. Tier 3. Wealth and private banking. This is the top of the ladder. And for most people, it's a world they've heard whispers of, but never seen up close. Private banking typically starts at around $250,000 in investable assets, though at the more exclusive institutions, the threshold is closer to $1 million or more. At this level, everything changes. You don't call a general customer service line. You have a direct number to your private banker. You get comprehensive financial planning, estate planning, tax strategy, investment management. Some institutions offer lifestyle services, concierge access, invitations to exclusive financial events. But more importantly, you get access to financial products that simply aren't available to the average account holder. Better loan rates, higher credit limits, investment vehicles with minimum buy-ins that most people couldn't meet. Your money is being actively managed, not just stored. The bank is essentially saying at this level, your business is valuable enough that we are going to fight to keep it. Let me make this concrete with a simple example. Meet Marcus and Devin, both in their early 30s, both customers at the same national bank. Marcus has $2,000 in his checking account and a small savings account he contributes to when he can. He's working on paying off some debt and hasn't thought too much about what he's doing with his money beyond the basics. Devin came into an inheritance a few years ago. He moved $40,000 into a high-yield savings account and also opened a brokerage account through the bank. He now has a relationship manager he can reach directly by phone or email. When Marcus calls the bank about a fee on his account, he waits on hold for 20 minutes, explains the situation to someone reading from a script, and is told the fee can't be waived. When Devin has a question, his relationship manager responds within hours, proactively suggests ways to optimize his accounts, and let him know last quarter that he qualified for a premium credit card with better travel benefits. Same bank, different worlds. Now here's the part I really want you to sit with. Marcus isn't doing anything wrong. He's doing what most men do. He just doesn't know the game that's being played. Devin didn't stumble into better treatment. He accumulated assets, consolidated his financial life in one place, and made himself a valuable customer. The bank responded accordingly. So what do you actually do with this information? First, know which tier you're in. Log into your account and look at the terms. What fees are you paying? What interest rate is your savings account earning? Is there a tier above you at your bank? And what does it take to reach it? Second, start thinking about consolidation. If your money is scattered across 4 different places, no single institution sees you as a valuable customer. Consolidating can move you up a tier faster than you think. Third, ask questions you've never asked before. Call your bank and ask what products or benefits you might be missing. Ask what it would take to qualify for preferred status. Most people never ask. The bank is happy to let that silence continue. And fourth, remember that the goal isn't to be loyal to any one bank forever. It's to understand how this system works so you can use it strategically. As your financial life grows, your relationship with your bank should evolve too. You are not just a customer, you are a client. And the sooner you start thinking like one, the sooner you'll start being treated like one. Banks are not charities. They are businesses built around money, specifically around the money of men who have enough of it to be worth competing for. The system isn't going to change. but your position within it absolutely can. The first step is just knowing it exists. If this video helped you see something you hadn't seen before, go ahead and subscribe. I put out videos like this every week, breaking down the money systems that most people are just living inside of without fully understanding them. And if you want to know exactly how to start growing your savings so you can move up that ladder faster, the next video is right here. I'll see you there.